Risk management is not just about setting a fixed stop loss. I'm David Capablanca. One of my biggest trades of my career was FFIE, totaling over $75,000 in profits. Without years of trading experience, screen time, and data collection, I wouldn't have the right judgment and level of confidence to increase my size in this trade. More importantly, I wouldn't have felt comfortable when I needed to adjust my risk management strategy for this super A+ setup that was presented to me. If you want to level up your trading, you should learn how to manage your risk dynamically. For my beginner traders, I will break down the process for you to help you understand how to gradually adapt your risk management as you progress in trading, and what are the key factors you should consider when assessing your own risk tolerance. Now, please like the video if you find my explanation helpful to you later in the video. I put a lot of effort making these kinds of videos. It's free to watch, so please consider subscribing to the channel if you want more realistic trading content. In my experience, a trader's risk management begins with the way they select the stock to trade, then the way they research a stock and formulate a trade thesis, and then the way they plan their entries and exits. Risk management is involved in every key step of trading. So instead of focusing on how much money I made, what I believe is truly useful to developing traders is my step-by-step walkthrough on how I planned and executed my trades on FFIE. I will walk you through, number 1, my trade thesis based on my fundamental research. Number 2, my trade strategy and executions. Number 3, and most importantly, how I manage my position sizing and risk management. This trade happened in May this year. Let's take a look at the daily chart here. This is a very classic parabolic move on small cap stocks. Most traders call this a multi-day runner, which means the stock had continuous days of breakouts on elevated trading volume 2. So this massive squeeze began on May 14th. The front side of the move, which means the uptrending days as you see on the chart, lasted for 4 days. So this huge first red day candle, which you can see here on May 17th, was the turning point. And the backside, which also means the downtrend of the move, began on May 17th. Also, the price that you are seeing here on my chart right now has been adjusted to the most recent reverse split that this stock performed. You can see that on the daily chart, the stock has gone through multiple reverse splits, which you can see in these bubbles right here, these purple bubbles. And you can see over a period of time that it's gone to even more reverse splits. It has a history of reverse splits. This is a fundamental indicator of a weak company with unsustainable value, as they have to keep performing reverse splits to keep their stock price above the Nasdaq's $1 requirement, or they would be delisted. Most recently, FFIE did a 1 for 40 reverse split, which means the company converted every 40 shares into 1 share, so the stock price was also multiplied by 40 after the reverse split. You can see that here. 1 for 40 split on August 19th. So let's take a look at this FFIE chart before the recent reverse split. This was how the chart looked like to me in May when I was actively trading it. The moment I caught this ticker on my scanner, I had a gut feeling that I needed to dive deeper into the company's financials and investigate the reason behind this move. Why? I'm a fundamental and statistical trader. My edge comes from diving deep into the company's profile, financials, and the previous corporate actions such as offerings, reverse splits, and dilution. So here's a simple 4-step assessment criteria that I use. Number 1, what does the company do? Does it have real value in its production? Number 2, is it a Chinese small cap stock? So if it's a Chinese small cap stock, I want to know like the origins of the company. Where is it domiciled? Is it related to the Cayman Islands or British Virgin Islands? Do they have ties in their filings to those 2 locations as well as other locations? And is this a Chinese WhatsApp pump? As we know now, it's pretty well known that the Chinese have these manipulation farms where they have like people constantly sending out WhatsApp messages, and they have like technology that sends it out to like hundreds of people at once. So it's like one person acting out as like many different people, sending it through different profiles, but it's one person. So there's many techniques that they use to manipulate the stocks and send out and get people's emotions involved. That's why they have these profiles of attractive young women reaching out to people on various social media platforms and trying to lure them into the stock, both on the long and now the short side. So they recently have used it, since small cap stocks, especially the low float ones, don't need much volume. They have realized they've adjusted their manipulation to target the short sellers. So I need to know that. I need to know, is this a WhatsApp pump? Is it a Chinese pump? Is it a straight up Chinese fraudulent thing that they're wash trading? Is there algorithms involved? I want to know like the origins, because like different types of these scams behave differently, and I just want to know which way to categorize it. So that's why I always observe what kind of Chinese small cap stock am I dealing with here? What kind of manipulation from China am I dealing with here? Number 3, the most important statistics for my trading style: the float and volume of the stock. Number 4, and finally, the company's financial situation if it's trying to raise cash. In the case of FFIE, I had a lot of personal insights regarding how sketchy the company was fundamentally. First, what does the company do? Okay, so in the case of FFIE, the company is a technology company that produces electronic vehicles. However, just like the J Capital Research short report points out, they're probably never going to produce any vehicles. Moving on to the second assessment question, is it a Chinese small cap? So in the case of FFIE, this is not a direct Chinese pump and dump stock, just like, for example, a Chinese company that's domiciled out of the Cayman Islands or China and, using the WhatsApp characters to pump and dump the stock and to target short sellers and liquidate the stock completely. Just like you see some stocks that go up, $50 to $100 and all of a sudden liquidate and it's down to $1 the next day. This is not one of those. This one, in the case of FFIE, they actually have a headquarters in California. They do have place somewhat by U.S. rules, and that's important to me because when the company has a physical location in the United States, now you're in the jurisdiction of the United States. You're in the jurisdiction of the SEC, and some rules apply. It's not a straight up scam like to liquidate a stock that doesn't even exist, like fairy dust. You know what I mean? It's not fairy dust. So this is important because there are some rules that are being applied here. However, there's a lot of Chinese ties. Someone that's involved, as a J Capital Research short report points out, that it was like dealing with a lot of legal problems in China and with a lot of scam background, and he's like a known scammer. So that's the person behind this whole thing. And so that person, probably has a lot of ties to people in China that can manipulate the stock without any repercussion. So by manipulation, we're talking about wash trading and other methods, who knows what. In the Conscious Trading Conference 2, I did a 1-hour presentation on all of the knowledge and all of the resources I've had over the years talking about Chinese manipulation and why I don't trade any Chinese stocks moving forward. However, in this case, this is not a direct Chinese stock. This stock has physical presence in the United States, and that is tradable for me, especially when it meets certain criteria, which FFIE met all that criteria. After it traded billions of volume the first few days, billions with a B, and was signaling for me the first red day is imminent. Okay, and on top of that, so I have a friend in Los Angeles. I have a lot of Chinese friends, and when I was speaking about FFIE, to some friends, especially one friend of mine that has an office space actually in my building, they actually told me about FFIE. I knew about it like surface level wise, like as far as like, the headline and the billions of shares traded, and kind of like, it's kind of a scam, but like I didn't know too much about it. I didn't follow that much about it. And that person actually told me about the scammer guy that's involved, the founder that's involved at FFIE, and how everyone or a lot of people know, is well known in China that this person's a scammer. And, so that was enough to tell me. I was like, wow, so even this person that's not really trading knows about the FFIE, knows about this guy, the founder, is a scammer, knows that he has trouble with the Chinese, the Chinese government, and how he's just a shady individual. When I hear that it's well known in China, so that he's a scammer, that tells me, okay, so this person has ties to manipulation in China for sure. Like that's probably what it is. Because like, how does a stock that's trading at 11 cents, which is what the pre-split price was, where this FFIE started from, how does it trade from 11 cents all the way to where it was like $4 or $5? And with billions of shares traded with no news, and it's about actually negative news, billions of shares with a B 4 or 5 days in a row. It just, so that's manipulation, So the thing is also, when the stocks trade at a very low price, someone can control the float with the, by buying shares at that low price. So they take the majority of the float at that low price, and then the rest is ripe for a short squeeze and manipulation. So that's what I need to know. And it's good to always have your ears to the ground. I always have my ears to the ground as a short seller, using fundamentals and using different various pieces of the puzzle and putting them together constantly. I like to know these things, you know. So when I hear that, you know, even though this person doesn't really trade, it's really helpful to me. Now it's like, okay, let me look into this a little more. And I see, okay, the founder, and I see, oh, J Capital Research did a short report on them. I interviewed J Capital Research. J Capital Research is extremely credible. So J Capital Research has feet on the ground in China to investigate. In my opinion, yeah, one of the top short report firms dealing with anything Chinese related, as far as Chinese related stocks. Great podcast I did with them, by the way. Everyone needs to go check that out. Thirdly, let's look at the float and volume, a really crucial concept regarding demand and supply, which I explained in detail in this video. So with FFIE, the run-up actually started around 11 cents, a few days before this right here. But right now I have the chart at 40 cents, but it's really started, it was the lowest price it was a few days before was 11 cents. So at that price, it was a 42 million float. So 42 million times 11 cents, you do the math, it doesn't take that much. I think I calculated at the time it would take like a few million to buy up the float, less than 10 million to buy up a majority of the float. And that majority of the float can get squeezed because, you know, the manipulator can get, or, you know, they buy up a lot of stock for low price. And that causes very little supply left for short sellers. And the short sellers can pile in there and get squeezed. As that price was low, the float was 42 million. So it was revealed later on, like 2 weeks after this run up and the big dump, the big red day, that the float was 420 million. The float 10x'd. So from 42 million to 420 million. So they diluted, so the manipulators, that tells me that the manipulators used all that liquidity, they generated all that liquidity, all this liquidity right here, all this volume to dump shares, to dilute. So from 42 million float to 420 million float, that's pretty significant. And they needed all that volume to generate, to lure in people, to lure in short sellers, to lure in buyers, to lure in everybody, so they can dilute their stock. They need that liquidity. Okay, so for me, as the stock was a 42 million float, and I was watching it kind of, but it didn't meet my entry requirements. I don't like to short stocks under $1. So from 11 cents, once it reached over $1, now it's on my radar. Now I'm like, oh, okay, this thing's traded 1 billion shares each time. And I go through my process, I check the float, 42 million float. That makes sense. Okay, so that's doable. And I know what's going on. When the stock trades at 11 cents or at a very low price, and even though it's a 42 million float at like pennies on the dollar, it won't take many buyers to buy it up, you know, like a dollar amount, a significant dollar amount. So that met my criteria. And then when it trades 1 billion shares a few days in a row, now it becomes doable for me to short it. And from 11 cents or so, pennies on the dollar, up that much, even to $1, that's still pretty significant for me to consider shorting it. So then after that, it was on my radar and I was planning for that first red day. And of course, short squeezes, they last longer than anyone thinks. Like the people that entered here, it lasted 2 more days. You know what I mean? So the first red day usually comes a little bit after everyone expects it to come. You know, it usually has one last blow off top, and then you get the first red day. So it's like, you know, it's all about timing. So for me at the time, I was in Argentina, I was traveling, and I wasn't even looking to trade. So like, that's the beauty about traveling also. It's like you get a delayed reaction. Even as me as a trader that's watching this and wanting to short it, looking for that first red day, having that delayed reaction to short it, it actually helps. So I had a little help with that as well, to nail the first red day. Finally, how is the company's financial situation? Okay, so again with FFIE, I like to look at the dilution tracker profile of it. So right now, after the reverse split, the float is 45 million. However, it was 420 million before the reverse split. So they're actively always diluting because, okay, so look at this. So back in August, they approved the reverse split and they authorized to increase the shares to 4.18 billion. That's a B right there, billion. So dilution tracker always has these nice development section here and points these things out. And it gives a description of the stock. So you see they're in the EV section, you know, so like they're trying to capture like, you know, Ferrari, Maybach, it's like this thing. But, you know, as J Capital pointed out, they're probably likely never going to produce any vehicles. And look at the former CEO has a Wikipedia page. This is the guy I was referring to earlier, Jia Yuiting. He is the former CEO of Faraday Future, FFIE. And if you scroll down to the bottom, you can see the problems that he has. So it's like problems in court in Shanghai, freezing 1.2 billion. You know, he's referred to as the Steve Jobs of China. That's how he's very popular over there. That's why, like, it's very common that everyone knows in China, like, they know who this guy is, and it's well known that he's like a scammer or something along those lines. You can see in 2018 he has ties to the, you know, the courts in the British Virgin Islands. They froze his assets. That's not good. And also in 2019, Gio filed for Chapter 11 bankruptcy in Delaware. He owed billions of dollars to more than 100 creditors in China. That's pretty wild. So he was accused of engaging in dishonest behavior during the bankruptcy and filed a motion to have a new bankruptcy trustee appointed. Okay, so a bunch of shady stuff. Altogether, he's in a lot of trouble. He's the founder and the former CEO of FFIE. And J Capital has this really good short report on their website. I interviewed them. You should check it out. And what's interesting is they have, okay, it's a really nice report. Really good to read it. And you can see they have people on the ground doing photos. They have a whole archive of photos of the plant in California as well. It's like little activity, you know, and it's a really well done report. So J Capital, very good. This was done, I believe, in 2021. Let's see. Yeah, 2021. October 7th. So always good to know this stuff. It gives me extra conviction to what I'm dealing with the trade, with the background of the people involved and who am I up against. It's like a chess game. You got to know your competition. Who are you playing against? Who's on the other side of the trade? It's very important. Okay. With that said, FFIE was considered my A++ setup, as all of the major criteria that I looked for in terms of fundamental analysis were confirming in my thesis that this was going to be a pump and dump price action with Chinese insider manipulation involved. So that was how I fulfilled my due diligence before taking any trades. If you're interested in seeing my entire pre-market trade planning process, comment pre-market routine below and I'll send you a free pre-market trade planning tutorial. Now I'll walk you guys through my trade executions. How I made over $75,000 on this stock. For complete transparency, I had taken multiple short trades on FFIE, starting from the third day of the squeeze. Here are all of my trades on FFIE. Earlier during the recap of the fundamental research, I rated this an A++ setup. So based on the thesis of the unsustainable manipulated short squeeze, my execution strategy was to short the backside of the move. Also, I wanted to be more cautious when the daily candle was still green. So smaller size first and gradually increasing size. And scaled into my position more aggressively when the daily chart has also confirmed a backside. Another key lesson for you about my trading executions is that I like to trade with the concept of recycling shares. So with recycling shares on FFIE, I was, for example, if I had a 10,000 share max size position at any certain point, I would have like 2,500 shares as a core position, and I'll rotate shares, I'll recycle shares around that core position. By recycling shares, it keeps me more flexible in the trade and I'm more nimble. So we as retail traders, it helps to be nimble. This is one of the advantages of being a retail trader. We're nimble, we can be in and out, be very flexible. And as I'm in and out of the trade, I can reassess when to enter, when's the best time to enter, and I can take like a little breather and be flat in the position, and that's advantageous to me. Also, with Cobra trading, they have excellent rebate routes. I like REB25 as one of my main routes, and when you add liquidity, it gives you nice rebates. So this cancels out a lot of my commissions. It's beneficial. So that's why recycling shares as a small cap short seller. With this share recycling entry strategy, the benefits are: number one, I get to lock in profits as the stock is trending in the direction that I want. Number two, in the big picture, I'm still riding the bigger time frames trend direction. Number three, at this stage of my career, my account capital is relatively high. It'd be smarter to take multiple entries with smaller sizes. If you know the reason why, comment down to let me know. Let me give you a hint. Think about the market cap of these small cap stocks. So to summarize on how I executed this trade, I started shorting on May 16th, the third day of the move, and went with heavy sizes on May 17th, the first red day, which was the day I locked in larger profits, and also on May 20th and May 28th to capture the backside of this trade. Now let me explain how I managed my risk when I was manually executing my orders. The 3 key takeaways for you. Number 1, a big part of the risk management process was the due diligence I fulfilled before even taking the trade. What I mean by that is, my risk management includes filtering out the stocks I should not trade. For example, if it's a nano float stock, no trades. And if it's real positive news, let's say the company announced a partnership with Nvidia, then that's real demand for the stock. So as a short bias trader, that's another scenario that I should avoid to reduce my risk of getting trapped. Number 2, the second key takeaway is to assess your risk tolerance. Every trader is different in terms of how much savings you have, how much living expenses you have, your account size. What is the amount that you can lose and still feel indifferent and emotionless? What is the biggest amount of shares that you have experienced trading? How many trades have you managed in a day? How fast are you able to cut your losses? And there are many more conditions that affect our risk tolerance as a trader. My general rule of thumb is, your ideal risk exposure in terms of dollar amount is the amount that you can enter a trade with and not feel anxious about it. If you are risking $1,000 per trade and during the trade you are panicking, you are shaking, you find yourself having internal conflicts on whether to close the trade early or keep holding. Those are all signs of emotional trading, which comes from you pushing beyond your risk tolerance. So a friendly reminder to my developing traders, slowly increase your risk per trade. The key to success in trading is not to capture the big wins, but to prevent the big losses and survive for as long as you can. Number 3. Now my third key takeaway is to set a max daily stop loss with your broker. This means choosing a broker that you can call or email them to set a max daily amount that you are willing to lose, so that they will automatically flatten all your positions at any point in time when your open trades hit your maximum drawdowns. I have been trading since 2016 and still have my max daily stop loss with my broker. So trust me, this is an absolute safety net for all traders. Please give me a like in this video if my sharing has been helpful to you, and please comment your key takeaway from this video. I really look forward to reading your comments. On December 6th, please join me in LA for my in-person live trading event. I will be going over my trading process during live trading market hours, during a 2-day real trading workshop where you can learn directly from me and how I trade. The 2-day event will include pre-market preparation session, live trading during market hours, trade recaps at the US Bank Tower 54th floor, exclusive psychology mastermind session at the Los Angeles Athletic Club, and a networking event. This event is sponsored by the broker that I use, Cobra Trading. Allow me to give my broker a quick shout out. Cobra Trading is a top trading broker that has competitive commissions and fast order execution speed. Specifically for my trading style as a small cap short seller, Cobra offers a vast list of locates, which means I can easily borrow shares to plan for my short selling ideas. Having shares to borrow is crucial for my success as a short seller, especially for stocks that move quickly on fake news or quick pump and dump agendas from influencers online. Cobra Trading also has great routing options for my limit orders that allow me to get filled at ideal prices and reduce the risk of slippage. If you sign up with the link in the description, you'll have access to Cobra Prime and all of my trading tools, which includes Dilution Tracker, Trade Ideas, and Ask Edgar. So I recommend Cobra Trading if you are looking for a trusted broker for all your day trading needs. Check them out by using the special discount code in the description below.